Good morning, everyone. It is Julie here with your Tuesday morning stock market news, where we're getting you up to speed with what you need to know as the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. I hope your week is off to a great start and you're getting ready for a fun long weekend ahead. This morning, we're going to be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Don't forget, you can get 10% off TipRank's premium and ultimate subscriptions by using the links in the descriptions down below. Now, let's get right into this morning's exciting stock market news. U.S. stock futures are currently in the red this morning. Right now, Dow futures are down 0.2%, while S&P 500 and NASDAQ futures are both down 0.21%. Shares of Yelp are in the green this morning after it was unveiled that an activist investor is pushing for a sale. TCS Capital Management owns more than a 4% stake of Yelp, which does make it one of the biggest shareholders. They believe that Yelp could be sold for double the current share price. The fund's president sent a letter to Yelp's management with his recommendation to boost returns and said that TCS may make its own bid to acquire Yelp. Analysts currently rate the Yelp stock a hold with a price target of $33. Adobe will be rolling out a set of artificial intelligence tools to Photoshop today. They said that their Firefly collection of generative AI tools, which are currently offered online in beta, will now include generative fill, allowing users to extend images to add and remove objects. The new feature gives users a magical new way to work by easily adding, extending, or removing content from images non-destructively in seconds using simple text prompts. They said that this is the start of the company's major initiative to integrate generative AI into existing creative workflows. The Adobe stock is currently rated a moderate buy with an average upside of 7%. EV company Lordstown Motors announced that they would be doing a 1-for-15 reverse stock split. The RIDE stock traded up around $30 at one point, but is now down at 30 cents per share. They said that the reverse stock split will help improve the marketability of the stock, saying that the higher market price would be more attractive to more investors, and that the reverse stock split is intended to increase their per share market price in order to satisfy NASDAQ's $1 minimum bid price requirement. The reverse stock split will be in effect as of May 24th. And Walmart has opened a high-tech market fulfillment center at a store in Arkansas. The company believes that the new order fulfillment system could be a game changer. It is built within the store and is powered by a proprietary storage and retrieval system called AlphaBot. Their market fulfillment centers are expected to increase the number of orders that stores are able to fulfill in a day, as well as feature promising faster fulfillment turnaround times with lower substitutions. Analysts currently rate the Walmart stock a strong buy with an average upside of 11.5%. Now moving right along to notable earnings reports. In the after hours today, we'll be hearing from Palo Alto Networks, Intuit, and Toll Brothers. In the pre-market this morning, we have heard from home improvement retailer Lowe's. Their stock is in the red despite an earnings and revenue beat as the company lowered their full-year forecasts. Their CEO said that although we delivered positive comparable sales in the first quarter, we're updating our full-year outlook to reflect softer than expected consumer demand for discretionary purchases. They're now anticipating comparable sales to be down 2 to 4%. Their Q1 earnings per share of $3.67 beat by 22 cents per share, and revenue of $22.35 billion beat by $670 million. The stock is currently rated a moderate buy with an average upside of 14%. Dick's Sporting Goods is in the green following their earnings beat. They reported Q1 earnings per share of $3.40, beating by 19 cents per share, and revenue of $2.84 billion grew over 5% year over year, beating by $40 million. The company also reaffirmed their full-year outlook. The stock is currently rated a moderate buy with an average upside of 28%. Then we have BJ's Wholesale Club. They are slightly in the red this morning following mixed results. Their Q1 earnings of 85 cents was in line with analyst expectations, while revenue of $4.72 billion missed by $90 million. They said that their fiscal 2023 outlook remains unchanged given their sustained strength in their grocery business and gains in market share. The stock is currently rated a moderate buy with an average upside of 19%. Moving to the after hours last night, we did hear from Zoom Video Communications. They did gain a bit before the market closed, but are fairly flat this morning after both an earnings and revenue beat. Their Q1 earnings per share of $1.16 beat expectations by 17 cents per share, while revenue of $1.11 billion beat by $30 million. The stock is currently rated a hold with an average upside of 17%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Yelp on the news that their activist investor is pushing for a sale. Trading under the ticker YELP, their stock is up 9.6%. They're followed by Metadata Limited under AIU, up 7.9%, and CCC Intelligent Solutions under CCCS, up 5.3%. And our biggest losers this morning are led by Endava following their latest earnings report. Trading under the ticker DAVA, their stock is down over 13%. They're followed by Integra Life Sciences under IART, down 6.3%, and Guardant Health under GH, down about the same. So that is going to be everything for Tuesday morning's stock market news. If you made it to the end of today's video, make sure you hit that thumbs up and say good morning in the comments. I always appreciate hearing from you guys. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.